Today we're going to explore timing momentum, a powerful tool that brings together several signals into one simple visual. At a glance, you get a clear view of the direction. Timing momentum is built on 5 key indicators. Let us start by looking at the first component, the trend indicator. It functions as a band around the moving average. When the price moves above the band, it signals an uptrend. When it falls below the band, it indicates a downtrend. For example, here we can see an uptrend followed by a period of consolidation and then a downtrend. Next, let's look at the price momentum slope. This measures the acceleration and direction of price movement, showing whether a trend is gaining or losing strength. Even during an uptrend, this signal highlights periods of slowing momentum versus renewed acceleration, giving a clear view of the trend's underlying strength. Here we can see the price gaining speed as it rallies, then slowing for a short period before continuing the uptrend. Next, we look at the relative market rank. This is a percentile ranking from 0 to 100 that compares each stock to the broader market over 4 time periods: the past month, the past 3 months, the past 6 months, and the past year. When the signal is green, the stock is in the top ranks, showing strong demand and consistent buying pressure. When it turns red, the stock falls into the lower ranks, reflecting weaker demand. On this chart, you can see how the periods of strong green coincide with the price rally, while the red zones show times when the stock lost momentum. Now let's take a look at power days. This proprietary signal combines traded value and price action with a strong focus on volume. It highlights when major players, such as institutional investors, are active in the market. Power days often reveal key turning points. Finally, we have the 20-day and 50-day moving averages. This signal helps confirm the trend. When the short-term average is higher than the long-term average, it indicates a positive trend, often followed by a strong upward move. When the short-term average is lower than the long-term average, it signals a negative trend. Here is a clear example of how timing momentum works. All the signals are green, showing strength across all signals, which confirms a strong upward trend. This combination gives high confidence in the market direction. Now that we've reviewed how each of the timing momentum indicators works on the chart, let's move to the screener and see how to use them to find the strongest setups. Here we'll use timing momentum and timing momentum direction, 2 key filters that help us find improving setups. Here we see the timing momentum column. This number ranges from 0 to 5, where 5 is the most bullish setup. It combines the 5 main signals we discussed earlier, so when all 5 of these are positive, the value becomes 5, and that's a strong uptrend. If only 3 are green, the time and momentum will show 3, which still means momentum is bullish. So let's filter for stocks with timing momentum of 3, 4, or 5. These are the strongest ones. Next to it, we have timing momentum direction, which tracks how the timing momentum changed over the last 10 days. If it's positive, momentum is improving. If it's negative, it's losing strength. Now let's also filter by timing momentum direction and set the value to 2. This means we're looking for stocks where timing momentum has been improving for 2 days in the past 10 days. So, when we see a stock with timing momentum above 3 and positive direction, that usually means a strong and improving trend. For a stronger setup, add earnings momentum above 10. This highlights stocks that are not only improving technically, but also backed by solid fundamentals. Thank you for watching. Enjoy the platform and don't forget to do your own research.